The news everyone has been waiting for has finally arrived. And if you haven't checked your bank account in the last few hours, you need to stop everything you're doing right now and look, because something absolutely massive just happened. We're talking about real money, substantial money, the kind of money that can actually make a difference in your life. And it's hitting accounts as we speak. The federal government has just approved a brand new stimulus payment of $4,800. And unlike all those rumors and false alarms we've seen circulating on social media for months, this one is legitimate, it's official, and it's already being distributed. This isn't some clickbait headline or wishful thinking. This is actually happening right now. And millions of Americans are waking up to find their bank accounts significantly heavier than they were yesterday. Let me tell you exactly what's going on, because the details matter here. And understanding who qualifies and how this payment is being processed could be the difference between getting your money quickly or waiting weeks longer than necessary. This $4,800 payment didn't just appear out of nowhere. It's the result of intense negotiations that have been happening behind closed doors in Washington for the past several months. The difference this time is that they've learned from past mistakes, they've streamlined the process, and they've made sure that the people who need this money most are getting it without the bureaucratic nightmares that plagued previous programs. Now here's what makes this particular stimulus payment different from anything we've seen before, and why you need to pay very close attention to what I'm about to tell you. The eligibility criteria have been expanded significantly compared to previous stimulus rounds, which means people who didn't qualify before might suddenly find themselves eligible now. We are talking about individuals earning up to $75,000 annually, and that threshold jumps to $150,000 for married couples filing jointly. But here's the kicker that nobody is really talking about yet. There are additional qualifying factors that could make you eligible even if you're slightly above those income limits. If you have dependents, if you experience job loss or reduced hours at any point during the past year, if you're dealing with high medical expenses, or if you live in an area that was hit by natural disasters, you might qualify for the full amount or a partial payment even if your income would typically disqualify you. The payment structure itself is fascinating and shows that someone in Washington actually thought this through for once. Instead of the one-size-fits-all approach we saw with previous stimulus checks, this program takes into account your specific financial situation and adjusts accordingly. Single filers who meet the basic income requirements are getting the full $4,800, but there are bonus amounts being added for various circumstances. If you have children or other dependents claimed on your most recent tax return, you're looking at an additional $600 per dependent, and there's no cap on how many dependents you can claim for this bonus. That means a family with 3 kids could be looking at a total payment of over $6,000 hitting their account. And that's not including any additional adjustments for special circumstances. But here's where things get really interesting. And this is the part that has financial experts and economists buzzing with both excitement and concern. The speed at which these payments are being processed is unprecedented in the history of government financial assistance programs. We're not talking about the usual 6 to 8 week waiting period with multiple verification steps and endless bureaucratic delays. The IRS and Treasury Department have apparently been working overtime, probably literally, to set up a system that can push these payments out in a matter of days rather than months. Reports are coming in from all across the country of people who filed their taxes months ago suddenly seeing deposits labeled as economic impact payments or federal stimulus appearing in their accounts without any prior notification. Some people are getting the money before they even knew the program existed, which is both impressive and slightly terrifying when you think about the logistical complexity involved in distributing billions of dollars to millions of people simultaneously. The distribution method is smart too, and it's designed to reach people through whatever channel is most efficient for their particular situation. If the government has your direct deposit information on file from previous tax returns or stimulus payments, that's how you're getting paid, and you're probably going to be in the first wave of recipients. These payments started processing late yesterday afternoon, and banks are reporting massive volumes of incoming federal deposits that are being credited to accounts on a rolling basis throughout today and tomorrow. If you haven't received yours yet but you know you should qualify, don't panic just yet. because the system is processing accounts in batches based on when your information was last verified in their database, and your payment could literally show up at any moment over the next 72 hours. For those who don't have direct deposit set up or whose banking information has changed since the last time they interacted with the IRS, physical checks are being printed and mailed out. But even that process has been expedited to a degree we haven't seen before, with the Treasury Department promising that paper checks will be in the mail within 5 business days of the approval date, which was just yesterday. Now let's talk about why this is happening now. Because timing is everything in politics and economics, and this $4,800 payment didn't just materialize out of thin air because politicians suddenly developed generous hearts. The economic data that's been coming in over the past quarter has painted a picture that Washington can no longer ignore. And while the official unemployment numbers might look decent on paper, the reality on the ground for average Americans tells a very different story. Inflation has been crushing household budgets in ways that don't always show up in the statistics that economists love to quote. Yes, the rate of inflation has technically slowed down, but that doesn't mean prices have gone back down. It just means they're increasing at a slightly less horrifying pace than before. The cumulative effect of years of elevated prices for everything from groceries to gas to housing has left millions of families struggling to maintain the standard of living they had just a few years ago. And savings accounts that were healthy in 2020 are now depleted or completely empty. Credit card debt has reached historic levels, with the average American household carrying over $10,000 in revolving credit card balances. And those interest rates have climbed to levels we haven't seen in decades thanks to the Federal Reserve's aggressive rate hiking campaign. Student loan payments resumed after a multi-year pause, adding hundreds of dollars to monthly budgets that were already stretched thin. Rent increases have outpaced wage growth in most markets, and homeownership has become increasingly out of reach for younger generations, with mortgage rates that have more than doubled from their pandemic-era lows. Medical debt continues to be a leading cause of bankruptcy, and even people with insurance are finding themselves drowning in copays, deductibles, and out-of-pocket maximums that seem designed to extract every last dollar from working families. This is the economic reality that finally forced Congress to act, and the $4,800 figure wasn't chosen arbitrarily. It's based on economic modeling that suggests this is roughly the amount needed to help the average American household catch up on delayed bills, rebuild a modest emergency fund, or address urgent financial needs that have been ignored for too long. The political dynamics behind this approval are equally fascinating if you're someone who pays attention to how Washington actually works. This wasn't a partisan victory for either side. It was more like a mutual recognition that something had to be done before the economic discontent bubbling under the surface exploded into something nobody could control. Both parties have been watching polling data that shows economic anxiety is the #1 concern for voters across the political spectrum. And with another election cycle approaching, the pressure to deliver tangible results became impossible to resist. The negotiations apparently came down to the wire, with different factions fighting over the income thresholds, the total amount per person, whether to include additional payments for dependents, and a dozen other details that could have derailed the entire thing. What ultimately got it across the finish line was a compromise structure that gave both sides something they could claim as a win. Progressives got the expanded eligibility and dependent bonuses they wanted, while fiscal conservatives got assurances about how the program would be funded and limits on the total cost. Speaking of funding, you might be wondering where exactly $4,800 per eligible American is coming from, because we are talking about hundreds of billions of dollars in total expenditure, and the national debt is already a topic of constant concern and debate. The official explanation involves a combination of reallocated funds from other programs that came in under budget, some creative accounting with projected revenue increases, and yes, a certain amount of deficit spending that will eventually need to be addressed. But here's the thing that most people don't understand about government spending at this scale. When you inject hundreds of billions of dollars directly into consumer spending, it doesn't just disappear into a void. It circulates through the economy in ways that generate tax revenue and economic activity. People who receive this money are going to spend most of it relatively quickly because they have needs that have been going unmet. And that spending supports businesses, which supports jobs, which generates payroll taxes and corporate taxes and sales taxes. It's not a perfect closed loop where the government gets back everything it spends, but it's also not the economic disaster that deficit hawks like to predict every time direct payments are discussed. Now here's what you need to do right now if you haven't already, and I mean this literally. Pause this video and go check your bank account, because time is genuinely of the essence here. Log into your banking app or website and look at your recent transactions and pending deposits.